Gold is probably 16 now because of the recent price rise. And so even if Bitcoin got to half of the price of gold, it's 8 trillion. You're at 1.5.
Yep.
That's a 5.75 move from here. So that asset could easily trade to $350,000. You could invite me back on your podcast and I could say it's undervalued in terms of where it is going as an asset class. I believe we get to 100,000 this year, but I believe we get to 170,000 in the cycle.
Scaramucci emphasizes that Bitcoin should not be compared to the market capitalization of individual companies, but rather as an entire asset class. While Bitcoin's current market cap hovers around $1.5 trillion, Scaramucci contrasts this with companies like Apple or Microsoft, whose valuations are similarly high. However, he argues that Bitcoin's value should be viewed in the context of its role as an emerging global asset class, akin to gold. Gold, with a market cap of approximately $16 trillion, serves as a benchmark in Scaramucci's analysis. Scaramucci estimates that if Bitcoin reaches just half the market cap of gold, it could easily skyrocket to $350,000 per coin. He remains confident that Bitcoin will hit $100,000 by the end of the year and predicts it could soar to $170,000 by the end of this market cycle, following patterns observed after previous Bitcoin halvings.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think Bitcoin, I'll say this about Bitcoin, it shouldn't trade at a market capitalization of a company. It should trade at a market capitalization of an entire asset class.
Which it is.
And so if Bitcoin right now is $1.5 trillion, there are companies that are worth $1.5 trillion.
Oh yeah.
But gold is probably 16 now because of the recent price rise. And so even if Bitcoin got to half of the price of gold, it's 8 trillion. You're at 1.5.
Yep. That's
a 5.75 move from here. So that asset could easily trade to $350,000. You could invite me back on your podcast and I could say it's undervalued in terms of where it is going as an asset class. I believe we get to 100,000 this year, but I believe we get to 170,000 in the cycle. So you mentioned plan B, best time to buy is before the halving, and then people can liquidate after the halving into an up sort of slope. Typically after a halving, you go 4x the price from where it was at the halving. And so let's say it halves in 2 weeks, we're at 70,000. People will say, all right, 18 months from now, it should be 280,000. So I just used the number that it was on the day of the ETF.
Okay, that's interesting.
Okay, here's the day of the ETF. Let's multiply that by 4, count the halving in, that's 170,000. And if this asset goes from 70 to 170,000, it started the year at 40 plus, I guess, 40. You have to do the math. I think it was 44 or something like that. I'm not sure, but
I think it was just under that. Yeah.
All right, but if you go from 40 to 100,000, that's a big move.
Yeah, it's massive.
Okay, and if you go from 100,000 to 170,000, still a big move. People have an opportunity to say, well, that's another thing. People get scared and say, wow, why would I buy that? It was 6,000 in 2020. It's now 70. It has to be too expensive.
Right.
Don't look at the price. Look at the slope and scale of the network. Look at the exponential growth in the network, and you'll see why people are paying that. All I'm saying is it just has to trade to half of the market capitalization of gold. So the third thing I was going to mention about Buffett as I was going through my 3 things is the margin of safety. Okay, so Buffett doesn't like Bitcoin, but I make the case that when these guys say they don't like Bitcoin, it's because they really just haven't done the homework on it. I was a Bitcoin skeptic. Michael Saylor, believe it or not, was a Bitcoin skeptic. I find when you do the homework, it's a one-way ticket towards Bitcoin. And so when I hear people talking about it and they say negative things about it. I'm like, all right, this person, man or woman, hasn't read the white paper, hasn't read the research, hasn't gone down the rabbit hole, hasn't talked to people in countries outside of the United States. So you remember, traditional finance people are dollar-centric people.
Right.
And so while the dollar's lost 22% of its value in the last 4 years, it has been the world's reserve currency for their entire lifetimes, dating back to the Second World War. And so if you're a dollar-centric person, you may be a little blindsided to that.
Right.
If you're living in Africa or you're living in Latin America where they punish the money way worse than we do here in the West, we do our requisite share of punishing the money, but they do a way worse job down there. And so, then you say, okay, maybe Draper's going to be right. But I'm saying, I don't know. I would love to have him be right, but if it's just half of the market capitalization of gold over the next 10 years, a $70,000 asset goes to $350,000 to $400,000. And I think there's a margin of safety in it, meaning you don't have to be where Tim is to get this right as an investment thesis.
As Bitcoin continues to grow in prominence, Scaramucci highlights an essential factor driving its price: scarcity. Bitcoin's total supply is capped at 21 million coins, and with every halving, the rate of new Bitcoin production decreases. This naturally leads to supply constraints. Scaramucci illustrates a scenario where institutional demand for Bitcoin far outpaces supply. He offers an example where a large institution like BlackRock has $500 million in Bitcoin buy orders, but the daily supply of new Bitcoin is significantly limited, creating a bidding war that drives prices higher.
Best performing asset in human history, the best launch of an ETF in human history. But the real question is, and I love Plan B, and I've interviewed him. He's been on my podcast. He's friends. But I think the real question is his stock to flow model or other technical models being skewed by the ETF? And so I think the answer to that is yes, because I'm a Wall Streeter. And so what do we know about Wall Street? Wall Street sells product. Okay,
Right.
Product is sold on Wall Street, not bought. And so when Fidelity, BlackRock, ARK Asset Management, they enter the ETF space, they've got people picking up the phone, calling consultants, calling asset managers, calling garden variety wirehouse financial analysts and saying, or financial associates, and saying, hey, please, Mr. Financial Advisor, buy 1% allocation to Bitcoin. Do it through our ETF. It's low cost. We'll store it for you. It's got a QSIP number. It can go right on your client statement, et cetera, et cetera. And so what Wall Street does is it gins up this huge selling machine. And you're seeing that right now in a very small way.
Right.
Because wirehouses haven't come into it. Registered investment advisors haven't come into it. Large-scale institutions have not really started buying it. Now, granted, there are sovereign wealth funds in the Middle East that have started buying it. But by and large, there's an untapped pool of several $1 trillion of assets that could enter the space. And if that happens, then me saying that there's a 50% market capitalization of gold will be very low. But I just want people to recognize where we are right now. These prices, if you overlay the macro environment, these prices are light. You can move it. It's easier to store.
Mm-hmm.
You can transact in it quickly if that's a decision that the world goes in.
Yeah.
And gold is something you can't do any of that with. I'm not betting against gold, though, by the way. Gold has a 5,000-year track record. So I'm not going to be this supercilious, arrogant person that says, gold has been put out to pasture by Bitcoin. I do believe that there will be people buying gold 100 years from now and perceiving it as a store of value. All I'm saying is that Bitcoin is going to mature as an asset class, and it's going to make that transition. And so when it makes that transition, there'll be Wall Street analysts describing it as an asset class. And they'll say, okay, we have gold, physical gold, and we have digital gold, which is known as Bitcoin.
Right.
And I think people will accept that. They'll be teaching that at business school. They'll be teaching that in an asset allocation class. or in a investment class somewhere over the next 10 to 15 years. Well, so on or about April 20th, we're going to go from 900 Bitcoin a day to 450. A lot of people get confused about this, so I want to make the distinction. It doesn't mean the supply of Bitcoin gets cut in half.
Right.
It means the amount of Bitcoin that's being produced by the network on a daily basis gets cut in half. So there's still a few percentage points left of Bitcoin that has yet to be mined.
Right.
And that halving cycle will take place through 2140.
Right.
So
Well into the future.
Yeah, right. So you got 120 years or 30 more halvings, if you will, before you get to the end of the Bitcoin.
How many Scaramucci says that?
I don't know. We could figure it out though. It's a lot. Many thousands of Scaramucci. But,
Yeah.
but the point I'm making is that this is a process that will mathematically make the incremental Bitcoin more scarce.
Right.
So let's say I'm Robbie Mitchnick at BlackRock and I've got $500 million of create, meaning people are calling me and saying create $500 million worth of Bitcoin. Mm-hmm. I now have to go into the marketplace. I got to call Coinbase or crypto.com or whatever trading it for me and say, hey, I need to source today $500 million of Bitcoin. Well, let's say Bitcoin's trading at $100,000, just use easy math. That was 90 million. Okay.
Right, yeah.
And then all of a sudden the 90 million is going to 400. I'm sorry, the 90 million is going to 45 million.
Right.
So you could have $400 or $500 billion worth of demand, but have only $45 million being produced by the network. So you have to find the Bitcoin from someplace.
Right.
And if it's supply constrained, what happens in markets? Well, bid up.
Price goes up.
Yep. You know what?
Yep.
You don't want to sell your Bitcoin at 70? You know, Larry Fink's on the line. He wants to buy your Bitcoin. You don't want to sell it at 70? What about 80?
Yeah.
What about 90? What about 100? Oh,
Absolutely.
you're a seller at 100? Larry, you want to buy some at 100? Well, I actually have to because I have $500 million of cash right now that I'm obligated to convert into Bitcoin.
One of Scaramucci's main takeaways is that Wall Street will play a pivotal role in Bitcoin's future. ETF, or exchange-traded funds, allow investors to buy Bitcoin in a familiar format through traditional financial markets. Scaramucci explains that these ETF will serve as a major entry point for both individual and institutional investors who may have been hesitant to buy Bitcoin directly. He foresees a flood of financial advisors, asset managers, and RIA recommending small allocations of Bitcoin to their clients. This shift, once in full swing, could drastically increase Bitcoin's market cap. Scaramucci mentions that this process is already underway, with institutions starting to dip their toes into Bitcoin. Sovereign wealth funds from the Middle East have begun purchasing Bitcoin, but the real institutional wave has yet to hit.
Please like and subscribe my channel.